A small bike dealer from India's capital, New Delhi, suddenly came into the limelight last month. The firm listed its shares in India's red-hot stock market during its initial public offering or IPO. It had invited bids to raise just $1.4 million. But it received bids worth over $573 million. It seemed like thousands of stock market investors eagerly wanted to invest in the firm. What was most surprising for market analysts was that the company has just 2 bike showrooms in Delhi and employs only 8 workers. This is not a one-off example. India's booming stock market has thrown up many such surprises. In the first 6 months of 2024, stock markets around the globe saw 551 IPOs. India accounted for about 152 public offerings, accounting for 27% of all IPOs globally. Compared to this, the whole of North and South America saw just 86 IPOs. Analysts say a large army of small investors looking for high returns and small corporations hoping to benefit from their investment have created a sort of frenzy. Just last week, one of India's largest home loan providers, Bajaj Housing Finance, made its stock market debut. The firm's stock price more than doubled in just a few hours of listing. This stock market fever in India is expected to continue as some big names are lining up to raise money via IPOs this year. South Korean giants Hyundai Motors and LG Electronics plan to list their Indian units. Meanwhile, startups like food delivery platform Swiggy and e-scooter firm Ather are also planning to launch IPOs this year. As Indian small investors put their hard-earned money into these IPOs, hoping for exuberant returns, let's try to understand what's driving the buzzing IPO market and what risks lay ahead for this frenzy. According to Bloomberg, the Indian stock market, which combines India's 2 main stock exchanges, the BSE and the NSE, has seen about 240 IPOs this year so far. Combined, these public offerings have raised over $8.6 billion for the companies. Many more IPOs are lined up. Compare this with 2023, when there were just 234 IPOs, which raised about $7.9 billion. In the past couple of years, a large number of small and medium companies have raised money through IPOs. Their stock market listing is a bit different from regular IPOs. It's called Small and Medium Enterprise Initial Public Offerings or SME IPOs. They are differentiated in terms of their net worth, profits and other metrics. The process and timeline for an SME IPO is shorter compared to a main board IPO. These IPOs are also cleared directly by stock exchanges without the involvement of India's stock market regulator, SEBI. Before the pandemic, in 2019, there were just 54 small or medium-sized firms that applied for initial public offerings. In 2023, a record 182 small firms listed their stock. And in the first 8 months of 2024, there have already been 186 SME IPOs. Why are so many small firms flocking to the stock market? A majority of these firms say that they use the IPO money to either pay off old debt or cover daily expenses.
Since SMEs play a very important role in the economy in terms of contribution to the GDP, employment generation, foreign exchange earnings, the general thinking is that SMEs have to be encouraged. They should not be denied access to the capital market. And therefore, the general attitude is a very liberal attitude. So, stock exchanges give approval for these SMEs, and SEBI does not come into the picture also. Therefore, the IPOs are done without due diligence, without strict, rigorous standards. And that is why many doubtful companies, many doubtful SMEs are getting approvals and getting listed.
According to most stock market experts, the key driver behind the Indian IPO surge and stock market boom is the country's growth potential. A recent report by KPMG said that while in 2023 the global economy narrowly avoided a recession, India showcased its economic prowess and diplomatic finesse. India has seen over 7% economic growth rate in the last 3 consecutive financial years. And this has been reflected in the performance of the Indian equity market. Between April 2023 and March 2024, barring the US and Japan, most top stock markets had less than 15% gains. Meanwhile, both Indian stock market indices, the Sensex and the Nifty, surged over 25%.
There is a positive correlation between the IPO market and the secondary market. If you look at the historical experience, whenever the secondary market is bullish, the IPO market also turns very, very vibrant, and the subscriptions will be very good. Many oversubscriptions are possible. This is a historical trend. So since the Indian market is doing exceedingly well, very resilient and bullish, and scaling successive new records, it is quite normal that the IPO market also does well.
Another key factor that has pushed the Indian stock market is the exponential rise of small individual investors. They are called retail investors. According to the Indian government's Economic Survey 2023-24, retail investors now make up nearly 36% of stock market trading. Their participation is also evident by the surging number of demat accounts. These are used for holding stocks. There were just 115 million demat accounts in April 2023. In 12 months, it has reached 154 million. This rise has worried many experts.
For the IPOs also, the response and the appetite for the retail investors is very high. So they play a really very important role in resource raising, because in a book build IPO, 35% of the IPO is reserved for them.
But then there are lots of black sheep also, and a large number of retail investors, particularly the newbies who have come to the market during the last 4 years, who do not have much of an idea about the stock market. They are irrationally chasing listing gains, and that is why we have this irrational exuberance bordering on insanity in the SME market. Though this calls for urgent reforms, it cannot be done overnight. The whole regulatory ecosystem of the SME IPO market has to be completely changed, and SEBI has to be given a very strong role in that, so that this comes under complete control of the regulator.
Risks are even flagged by market regulator SEBI. Earlier this month, it released a report on retail investors. It showed that more than half of the investors in IPOs sell their shares within a week of listing. The SEBI report also found that most stock market listings which were oversubscribed during the IPO recorded strong gains on the day the company's shares were listed on exchange. However, in later trading sessions, these stocks declined. This shows that Indian investors have increasingly become short-term stockholders. SEBI has also pointed to the possibility of manipulation. It is being done by creating an illusion of high demand. Scammers apply for multiple lots of a company's shares during the IPO. This helps fill IPO allotments and at times helps IPOs become oversubscribed by multiple fold. It makes other investors think that the firm's shares are in high demand. To address this concern, SEBI intends to implement some measures. According to reports, the market regulator is planning to tighten norms for SME IPOs. The aim is to bring smaller IPOs under a similar level of scrutiny compared to main board firms, so that retail investors are protected. But until SEBI brings in any new safeguards, it will fall on individual investors to secure themselves. And as the Indian stock market touches new highs, like it has done many times in the past few months, experts advise caution. While investment is just a click away, should you subscribe to IPOs or not? That call depends on the investor's wallet for now.